It is official. It's halfway through 2022 and Fundrise has outperformed stocks, public REITs, and crypto. It is Fundrise's best relative performance ever. What should we expect in the second half of 2022 from Fundrise? Coming up. If you're new to the channel, my name is Trey and I have over $623,000 invested in stocks, crypto, and real estate. If you enjoyed this video, make sure to check out my entire Fundrise playlist linked in the description below. It has over 40 videos on everything and anything you need to know before, during, and after investing with Fundrise. Also, if you decide to invest with Fundrise for the first time, make sure to open a new account using my referral link in the description below. For a limited time only, you will get $50 bonus added to your account for free if you open a new account and deposit just $10. Now, let's get started. In 2021, Fundrise generated an average return of 22.99% for investors, making it their best performance ever in their 10-year existence. Now, in 2022, Fundrise is on track to beat all other investment vehicles such as stocks, crypto, and public REITs, on a relative basis, of course. Simply put, Fundrise is outperforming the S&P 500 and publicly traded REITs by 25%. Now, here is the chart that summarizes returns in terms of dividends and appreciation. If you've been watching my channel, you know that returns from dividends are returns that Fundrise generates in terms of rental income and interest on the loans that they give to land developers. And returns in terms of appreciation are the returns that get generated through intrinsic increase in value of the properties that they own or redevelop. So as you can see on this chart, Fundrise is literally the only asset that is positive year to date in 2022. 1.22% return in dividends and 4.31% return in terms of appreciation across all of their different portfolios, making a total average return of 5.52%. If you look at the public REITs and public stocks, it's more of the same, negative 19% and negative almost 20%. You can actually add crypto to this chart, but it will say negative 50%. So I am sure that no one will dispute that so far, year to date, Fundrise has been the best investment vehicle that you could have. So how is Fundrise able to achieve these results while all the others struggle? Well, it is no secret that the Fundrise team approaches things from a long-term perspective. It has always been their long-term goal to deliver both stronger and more stable returns. Now, the key word there is stable. What this means is that unlike stocks and crypto that can return 50% one year and then be down 30% the next year, Fundrise may have smaller returns year over year, but without overwhelming volatility. For example, one year Fundrise may return 22% instead of 50%, and the next year 12% instead of negative 30%. This stable and volatility-free strategy allows Fundrise to perform well when the market in general is down. Fundrise is able to achieve this long-term goal by creating a portfolio that is driven by fundamentals rather than speculation, by investing only in high-quality real estate in certain locations of the country, by using minimal leverage, which gets all other investment vehicles in trouble in the first place, and finally, by having a low fee model, which in turn gets higher returns for investors. And guess what? No hidden fees like most of the other investment vehicles out there. In fact, as early as 2019, Fundrise believed that the economic cycle is ready to turn. And so they were preparing for a market downturn, correction, and even recession. The global pandemic and the war in Ukraine further sped this correction that is happening right now up. Today, the Fed is fighting inflation by increasing interest rates, and the Fundrise team believes that this will be a long and painful process, as almost 15 years of near zero interest rates and money printing most likely cannot be undone in just 6 to 12 months. The leveraging of overvalued tech companies, that some of them actually do nothing yet have valuations of over 50, 100, or even 200 times their earnings. This deleveraging needs to happen in order to keep the markets honest and keep the money out of the scammy CEOs' pocket. So what is next? Well, rising interest rates, high energy prices, and increasing consumer goods prices will eventually cause consumers to slow their spending, which will cause companies to lower their growth expectations, and that will cause stock prices to plummet once again and cause another leg down in the asset prices, lowering the valuations of these companies to more reasonable, maybe 10 to 20 times their earnings. This inevitably will cause a recession if we're not in one now, even though that we met the definition just a week ago. 2 quarters of negative GDP equals recession. Yet our government here in the United States claims that, hey, we're not in recession, and they say because the job market is is booming and there's so many jobs and people are working. Well, the job market is actually a lagging indicator. So, in my opinion, and I believe that the Fundrise team believes the same, is that now that we're officially in recession, we will see massive layoffs, massive loss of jobs sometime in the near future. Now, I hope not, but I think that will happen. And when that happens, things will get even worse before they get better. Don't be fooled by the dead cat bounce that we're experiencing right now in crypto and the stock market. Over the past 30 years, the Fed has bailed out Wall Street whenever times got tough, when the CEOs are just making 10 million a year instead of 50. So in other words, when recession hits, the Fed would start lowering the interest rates and start printing money yet again, therefore devaluing the US dollar, therefore hurting the regular people, the working class, the middle class, and the poor, while the CEOs, unfortunately, still make their millions. So the popular opinion this time around is that the same thing will happen as soon as February of 2023. However, Fundrise thinks different. The team believes that in order to bring inflation down to the desired 2%, the Fed may need to keep interest rates high despite being in a recession. This is a truly historical thing to do after 15 years of money printing and near zero interest rates. So what steps is Fundrise taking today in order to outperform the other investment vehicles in the near future? First, Fundrise believes that their high-quality real estate portfolio located in the Sun Belt regions is a strong asset to hold in this economic environment. Fundrise team is also building an enormous cash position and patiently waiting for the prices to decline further. When the time is right, and that's very important, when the time is right, Fundrise will likely invest some of that cash into stocks and public REITs when the valuations are much lower in the publicly traded markets than in the private sector, which is where Fundrise is currently in. They will also keep investing and buying this high quality real estate. The important thing to know is that if the government and the Fed decide to turn the money printer back on in order to bail out Wall Street from recession that we're already in, you need to own assets. If you just have cash in the bank that is earning 0.01%, you're literally losing 9 to 12% or even more, because the CPI is a fake number. You're literally losing 9 to 12% a year of purchasing power with your money. So if you don't trust the stocks or crypto, it's too volatile, or real estate, first of all, invest with Fundrise. Second, at least put your money in the CD, certificate of deposit, or the high yield savings bank accounts, which will earn you at this point right now, if you lock it in, somewhere between like 2 and 3.6%, I believe the highest that I saw. So at least you're getting some of the money back, and they're not just sitting in the bank rotting away, getting rotted away by inflation. So this is it for me, guys, but I want to hear from you. Do you believe that Fundrise is correct in believing that Fed will not rescue Wall Street this time around? Or will history repeat itself yet again and the money printer will go as soon as Wall Street will have its back against the wall? Leave your comments down in the description below. Guys, thank you so much for watching. If you enjoyed this video, please don't forget to like and subscribe button and use my referral link to open a new Fundrise account if you want to invest the right way. I will see you next time. Take care. Peace.